The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this very first day of February. The candle is done with January of 2018 in all the indices. We'll go there very soon. A couple of things that we need to look at. The Dow, the general market, but the Dow in particular, really plummeted early on. And now the Dow is up 117 at 26,266. Way below the 26,616 all-time high of the late January 26, I think it was. The S&P is up 9 at 2833. Percentage-wise, it's a little bit weaker than the Dow on this rally. I'm going to talk about the turnaround. I'm going to talk about what I'm expecting, but let's just go through the numbers. The QQQs at this particular time. Let me get out of this right here. So the QQQ trading at 169.31, down 9 cents, made a high with the other indices on the 26th at 170.95. Pulled back quite sharply. I did not get a down arrow because the MACD hadn't crossed negative and the stochastic hadn't crossed negative. That is under 80%. And the price hadn't plummeted under the 9-period exponential moving average. It moved under it but held above it. So that meant that the consolidation aspect is still continuing, and it continues right now. Only difference is that the Qs have not made, the PowerShare QQQ Trust Series has not made a new high for this week, and it's already Thursday. I'm not sure that the Qs can go unless Amazon and Apple, unless it's spectacular, Google, at least one of them has to have spectacular earnings and have a spectacular push to the upside tomorrow. But this afternoon into tomorrow's open, because they have earnings coming out after the bell. But what's really important right now is it would take a move not to 170.96 just to make a new all-time high. It would really take a move in the Qs to go to the 172.50s within 3-4 days. If it does that, that is spectacular action, and we can just have another big extension to the upside if it holds all the way into Tuesday. Otherwise, this consolidation, a timely consolidation, considering the technicals are just starting to weaken a little bit in the Qs. In the weekly chart, the MACD is still very strong. Stochastics at 98.44. That's at 1.36 below 100%, which it never reaches in a stochastic. That is amazing. And the fast-moving average, that green line, look, it hasn't started to turn down, and you can see the histogram is still very strong. That's above the 0% line. The RSI is turning down, and the on-bounce volume is turning down a little bit. And you've got a leg C, and if all of February does not produce 170.96 or higher, that will become a peak C in the monthly chart. That's a long time to go in this kind of market. Okay, a couple of things. The IWM, which has been the laggard, is having a nice bounce off the low this morning, but it is in a sell mode, basically, in the technicals on the daily chart. Weekly chart, I have to wait until Friday before I get any kind of signal at all. What's really important is at 156.54, up 18 cents. The 157.62 is the 9-period exponential moving average, was fabulous support all the way from the breakout upside mid-December. In fact, you can go all the way back to about the 18th or 19th. But what's really important is that the weekly chart has 155.52 as key support that has to hold on a weekly basis. So that's the QQQ. Now, what I think is important, let's just go to gold, because the other commodities that we need to look at. But gold is up 2.5 at 13.45. The weak technicals that I've been talking about for a few days now is suggesting that, and just to be clear, for my opening call subscribers, we had a small position in the gold stock. Because it had moved quite a lot higher, I had to raise the stop to the entry, just below the entry price, because to give back gains after a really good move, I don't like that. Usually what I like is to have a core position and then the trading position we can mess around with. But the core you want to hold. I didn't have any core here. So what happened is we got taken out yesterday for a very tiny loss. I said, let's get back in this morning. And one of the reasons is that gold has a way lately of moving up as you turn around or you go to the bathroom, whatever it is. That's when gold suddenly has a pretty decent move because the weekly technicals are really pretty strong. And it's a single leg A to the upside. One of the weaker moves to the upside that we've had in the weekly. But look at the one in July went from, in gold, went from, let's just go from 12, let's call it 1220 to 1372. That's 150 points. That's big. This one has only gone from the low of December, the week of December the 15th, 1243, to the high was made last week of 1373. You can see that's a lot less. So what has improved is you're making so far higher lows in the monthly chart. We haven't yet made higher highs. We just need to sneak above 12. I keep saying 12. It's 1372, the high of September, to start leg D in the monthly. But then it's the quickest A, B, C, D on the upside, A peak, B peak, C peak, D. And that says, unless you really take out strongly the high that was made in July of 2016, 1412.6, this could still be a big consolidation before a much larger move up later on. And I don't know when later on is because it depends on whether in the next month or so, let's say 6 weeks, if gold breaks closes underneath 1320 to 13. Now let's go to the 200-period moving average support, 1294. For any reason, if it closes under that, that's really not good action. If it powers into the 1380s to 1390s, that's going to be very good action. Okay, so I want to do that just quickly. Silver, what we're looking at here in silver is down 9 cents at 17.14. It's really struggling. It's not breaking down, but it's just a high-level consolidation. It needs 17.55 to show that it has the upside veracity. And if it breaks under 17, that's not going to be very good. So now I wanted to go to high-grade copper. High-grade copper is trading, was down. Now it's up a little bit, up 0.16 at 3.211. It's hugging the 9-period moving average. This is actually the last 4 days. Has been very good action considering how it was steadily going down. Now it's trying to go sideways. It's even trying to make a U-turn to the upside. 3.21, if it goes to 3.26, no, let's make it 3.2650. That'll be very good. And if it breaks under 3.14, it says, nah, it's stuck in this trading range. That's the way I'm looking at it. I want to go to the dollar DXY. It wasn't acting all that well. It's down 34 cents at 88.79. It really looks quite poor. And it had the opportunity to break out. It just couldn't. It hasn't broken above the 9-period moving average of 89.45. That's 70 cents or so. Down from here, up from here. And what I'm really looking at is that weekly chart. The flat stochastic at 7.20 is the equivalent of being at 93, somewhere around there on the upside, and holding steady. Flattening out at the bottom is negative, flattening out at the top is positive, and the monthly chart is under the 200-period moving average of 89.63. Well, when we get back, we'll look at the TLT, and the question I had yesterday that I didn't finish was on Boeing. We'll be back straight after this. TLT is down 87 cents at 121.86. Higher yields. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank bank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone, we're back. So the 30-year T-bond, this is the white in leg C in the weekly chart, should go to a D. It's at 29.79, up 37. And that's the yield. Here's the T-note, 10-year T-note, TNX, leg D, very strong, 27.48, 2.748. And the 5-year, the FVX, cyan colored, leg C, should go to a D. So this is still very positive, is at 25.39. I think yields are something that we have to keep an eye on. Yields aren't any reason at any point to say, oh, now we're going to crash to the downside. Yields are something to watch because one by one they affect certain areas. If you look behind you, here's another chart. Look at this. This is the chart of Wood iShares Global Timber and Forestry ETF, pulling back just a little bit. It's up to date 52 cents at 77.12, but it did make a new all-time high earlier this week at 77.89. And we're going to be watching this one. This is the first red candle we've had in weeks. So we're watching that. But the HGX Philadelphia Housing Index, that is pulling back. It's up today $1.12 at 350, but it has gone lower and 19 points down. So this is something that is impacted one by one. And now I said two things. One is that I would have a quick look at the VIX index. Let me show you something here that's very interesting. We've gone to a peak D. Very seldom in the daily charts do we actually get to a D, but this is the highest level we've had, gone to 1542. Yeah, 1542 yesterday. And we did that so quickly. Now I want to talk about a couple of things. Within the context of what we're looking at in these cup formations that fail, the VIX is now at 1277. Today didn't spot, even though the Dow made a lower low, it did not go to, the VIX didn't go to a higher high at 15.4, over 15.42. This is suggesting that the immediacy of the selling that occurred early this morning, and it kind of trapped me in a certain sense because I send my newsletter out at 8:30. I'm pretty much done. I have a quick review. And by 8:35, it goes out. I've already sent out plenty of charts, if I can find it here. Yeah, just tons and tons of charts. I do an analysis on the Dow. I just do a very comprehensive look at the markets. I'm showing here, for instance, here's the Dow. 120-minute chart. I showed the pattern, the H pattern that I thought would turn into a possible M, lowercase m pattern. I talk about the daily chart, the parameters to watch, etc. Now, and I talked about this. This is the Chapman wave. This is the methodology that I've developed. We went 1, 2, 3, 4, and I do expect 5 to be hit with a lower low below 26,028. Just I haven't had a chance to even look. I was out for a while. Let me have a look here. This is the 120-minute chart. Yeah, we just did it. So it actually turns out to be a trough C in the Chapman wave, but it was a 5. That's exactly what you look for. Now we can have a pretty decent rebound. And it all happened as the news came out at 8:30 about jobs. I don't know what it was, but there was a report that impacted the market immediately. Well, what I wanted to do in the portfolio that we have, okay, I finished. There's your 5, and I'll put a little yellow circle, and that says, hey, now you can have a pretty decent rally. I'm not expecting a new high at this point. We'll see what happens. Days young, anything can happen over the next few days. But there's the H that could be going to another arch formation like that. I'll draw it in. Another arch formation right there. Okay. So my thinking was, and the reason why we actually got a short position in the Dow, which because it doesn't trade pre-market, I was kind of stuck with the only number I had on this particular instrument, 1-to-1 short. And I thought I was choosing something that was below the actual price that it would open at. In a way it wasn't, so I was kind of messed up with that. We're probably going to be taken out. I'm not sure if we're taken out yet. We have a reason to be tight, stop 1.5, I think, or percent, maybe 2%. Let me just check. Yeah, I think we're still in it, actually. So there could still be a turnaround. But the reason why it was a price situation is because the speed of the down move so quickly. I didn't expect that. I thought I would get a good price, and then I could hold this position, expecting that it would take all the way to maybe 26,500 before it was even impacted. So this is going to be something different. Now, let me just go through. So that's the one thing. The other is that I haven't been afraid for subscribers to go long or to go short. We got a short yesterday, and the stock dropped it dropped. Let me just double check so I can give you exact information. From the 33.51 level that we wanted, and it closed in the 31. Sorry, yeah. So 33.51 and it closed at 31 something. So it had a big move down. Even now, it's not acting all that well. So, yep, not afraid to go long, not a great friend. The long position we put on has done extremely well, the new long position. So I think this is a mixed market, and you have to treat it that way. I'm going to be forced to, I'm going to possibly, if the Dow continues up for about another 50 points or so, probably going to be stopped out of the position that we took in the Dow. Still have the core long position way down from 22,290s, but on a short-term basis, that was very poor action on my part. But I was misled in the sense that I thought there could be a pop-up to make that H to M pattern, but in fact, the opening price was not favorable to us. That's just the way I want to. I just want to clarify. I like to clarify because it just makes it easier for me to think the next step. So now I said I'd go to Boeing. Boeing trading up 6.21 right now at 360. This is a new all-time high. Now, what's really important about a gap to a leg, potential leg E in the daily chart, this could be turn out to be E/B. I'm calling it E for now because the MACD is okay. Stochastic's still very weak at 74%. On balance volume is strong, but it's the weekly chart that has been just so powerful, and that could easily, because I've noticed this is one of the few times ever that I've noticed so many charts. When you go back, that the Ds that were made with a very quick peak D in the Chapman wave moved to the upside, turned out to be Chapman wave instant restarts. So I have to consider this is not just a G, it's a G/C, and I'm going to put that in the weekly chart. Now, the question always comes up, hey, what? I mean, anybody could say, oh, we didn't go down, we're going to go up. No, this is a technique. It's a technique that says at this particular point, there's no reason why you should consider the weekly chart bearish. Think of it as just an extension going to G, but it could even be a C. It could even be more bullish. So until 321 on the weekly chart is taken out on the downside, this is still in bull mode. And the daily chart has a price movement. Now, what's really important about the gap yesterday and the lousy action afterwards, so it gaps up on the Boeing on the 30th closes at 337.71. Comes out with earnings, 337.71, right? Comes out with earnings, gaps up, opens at 368.50, has a low of 360.97, just a tad lower, has a high of, it has a low of 351.62, and closes at 354. So today, making a new high without a new low so far is really very good action on the day. Day's up. I'll be back. Dow is up 130.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. Dow's up 132, S&P's up 8.5. So we've got Scott online. Scott, how are you? Scott from Safety Harbor, Florida.
I am doing well, Basil. The weather
Good.
here should be, you should have to pay when you wake up in the morning some sort of fee. It's just ridiculously beautiful.
Don't, Scott, don't even mention it. If any politician's listening, oh my God.
Don't give the governor any ideas.
Within an hour, it'll be there on the legislation.
I'll tell you, Basil, stock market aside, it's just, I see people drifting back into the mire again. Please, everyone. It's just a new year, and they're getting down already. Please be happy. If you got your health, I mean, literally, you have your wealth. I want to take a look at GE today and get your opinion on that.
So, folks, we're looking at GE down 15 cents at 16.02. Market is up. All the indices are up. GE just cannot participate. There is something deeper in GE than just the chart pattern. I suspect that when the new when the new leader of GE starts to do all the work that he has to do, it's going to be very difficult because he's going to have to make decisions that apply to the businesses, the many, many businesses, but he's also going to have to do a lot of work to see how we can resolve the pension issue. I think that's overhanging, and I think it's going to be overhanging a number of the big companies coming up, but GE is the one that we should focus on. So as a chart formation, what I said to you last time when we spoke is when you're dealing with GE at this particular point, I think that it's trying to find a base in the $16.20 to $15.80 area, and that there should be nice percentage pop-ups, but beware, because if it starts to take out 1550 support, there could even be talk. They'll have to save it by talking about a split of the company into 3 divisions, maybe 4, who knows how many, but that's the only way they're going to do it. So I'm looking at this, and I think, you know, you've spoken to us over the years many times with stocks like CX, which I have to thank you for. It's been on my list real long. It's doing very, very well.
What you just said was, you know, genius, really, and that's what I'm afraid of. It's happened to me a couple of times, once with Alcoa, and it was funny. I told you at the time, I said, you know, when Alcoa is a lower price stock, and a lot of the traders, well, out of the 20 guys that I contact, you know, every week that are day traders, not one of those people trades Alcoa anymore. Same thing happened with Citibank. So I know to the, you know, the technical guys, they don't care. It's just 4 times, it's the same price, you know, it's just, but there's something psychological about it, and people don't want to trade it anymore.
So what I'm going to say to you is that your technique has been a fabulous technique in identify the sexy stock, or the one that's in play that most people aren't even looking at, but it's had a fabulous bounce, or it has an even bigger rally than a bounce. It actually has a swing move, and you are able to trade that. I'm just suggesting
to you, Basil, to everybody, and I'm not, you know how it is. You don't take your own advice. The auto mechanic's got a broken car in his front yard. But to everyone that's listened to me, I would say this: wait till you see some sign of strength in GE. Because, like you said, a lot of things can happen, and it can fall off the table. So, for everyone else, I would say wait for a little bit of strength.
Yeah, but I would add sustainable strength. I don't want to see the bounce like we saw back on the 22nd, 23rd of January.
I managed to grab like 15 cents, you know, last week. You know, it went up like 75 cents. But, you know, that was a false negative. So, yeah, absolutely right. I want to see for the average person, I want to see about 17.25 before you get involved.
Yeah, I think you're right, and then it's in play, and there's a big difference. But even then, a stock that has a history of how can I put this gently? A stock that has a history of failing you, and big red candles like you see in the monthly chart, the weekly chart, the monthly chart, you just have to be prepared and say to yourself, there's a chance that we could see exactly the same thing and at any point. And that's the only thing. I would avoid it, other than just a quick day trade. I'd avoid it as anything more than a quick in and out, because
absolutely. I did, you know, I'm speaking like people can read my mind. Yeah, you know, I'm just strictly the short trade. I'm telling you, Basil, I don't care, you know, what anybody says. I would do a lot more day trading now and a lot less investing. But I got to mention the 300 that we dropped the other day. People got so excited about it. My goodness, we're at 25,000.
Right.
Who cares about 300 or 400 or 500 drop?
Unless you're a short-term trader, I agree.
I mean,
so
we can go down a long ways very quickly, and I'm not really worried about that right now. But again, I'm with you. Take profits. That's the main thing that I keep telling you all the time, that I have problems with people that follow me, friends and family, that could have made a lot of money. But then when I say, show me your sheet, show me what you did, then they come clean, well, you didn't sell it. No, because it was headed up.
Yeah, so that's a big difficult. But, Scott, I think, I'm just going to say to you that the GE is a stock that you're able to trade. At this particular point, I would avoid it only because there's probably another shoe or two to come out, and you don't need that. Who needs to be looking at a stock and out of the blue something said? It could also pop very strongly, but I'm just afraid of the drops, because every time it drops, it makes a new low, and then that's the new platform. I don't like that.
And you're correct, because there's not going to be much news that's going to make GE pop, okay? It's just, but there is news that can make it drop. So you're absolutely correct.
So thank you for reminding us about that, and thank you for calling. Always appreciate it, Scott. Have a great day.
Thank you, Basil. Thank you.
Thank you. So, folks, I wanted to do a couple of things here. So I've been asked just my perspective of where we are and what I'm looking at. So let's do it this way. Within the Dow itself, I think it's going to be real tough to make a new high unless earnings today are so spectacular, Apple being one of those that it needs. Apple trading at 169.49, up 1.06, but it made a doji candle peak E high in the daily chart at 180.10. Why did I ever write that in? 180.10. That was around about the 16th, 17th of January. It traded down a few days ago to the 164s. It's trading at 168 right now. The weekly chart is at a peak F, also with a doji candle, very lousy technicals, and the monthly is in a leg C. So it's going to have to do something absolutely fantastic this afternoon when it announces the earnings to get back even to, let's just say, gets up, let's just say 7 points. Okay, 7 points from 168 takes you to 175-ish. 175-ish is still under the 180.10. I'm not sure what it can do to get to 180.11 to start a new high, all-time high. So I'm looking at this and saying, you know what? Apple is, in fact, a great stock, but it's just going sideways for quite a while. I think it's still consolidating. And I want to look at this, and I want to go through what I believe is important right now, at least for me and for subscribers, because we are still in the infrastructure area. We are in quite a few infrastructure-type stocks, which are doing really well. So I'll be back. We'll talk about this as soon as I get back, and we'll talk about the Dow and the S&P.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, so we're back. Let me just finish up with Boeing, and the reason why we got deflected away from that was because I want to answer Scott, his call in. But this is a leg E in Boeing, a gap up to a leg E. That's always where I'm kind of a little cautious when you gap up to an E or an F. Usually it's a Friday that I get a little cautious. This is a Thursday, so I did it yesterday, extended today. I'm just going to give you numbers. I think it's much better. I would not, would I short, the question is, would I short Boeing? I would short Boeing via a put, and the put wouldn't be, I wouldn't get carried away. I would short it via a put. It's a 359. I'd be looking at a 335 put, and I wouldn't be looking in, probably looking more towards March than February. That's the answer that I would give. Reason being that the daily chart is suggesting that the gap up was news related. This is an excellent follow-up because if it closes at any point below yesterday's low of 351.62, it's 359.71 right now, especially since it's made a peak E in a leg E with probably a peak E in the 120-minute chart. Let's just call it E for now. Technicals are still good in the 120. I'm just going to make it real simple. If there is a close below 352, that's the high that was made, the all-time high on the 17th. That's going to suggest at the best possible scenario is that we've got a sideways consolidation. And the most important level to hold will be the low that was made on January the 22nd at 332.04. Let's call it, say, at 330, close below 331, would say, uh-oh, now we're going to consolidate, and you've got a huge move up in the weekly chart that all those legs there going down to the 315 area makes it vulnerable. I would only go step by step. I cannot say to you right now, oh, yeah, this is it. This is it for Boeing. Everything about it to me says, wow, Boeing's ready for a consolidation. And that's the way I would look at it. Is it one of those that I would short? No, I'd rather short the sector that's where rates are rising and the home builders are starting to find it's difficult for them to hold rallies. At least that way you've got the deflection of some reaction to the economic and the fundamentals, and you've got the technicals, which is suggesting that that is very toppy in terms of the daily charts of many of these, many of the home builders, and the weekly charts have actually started to deteriorate. At least you've got something behind you. Now, make it very simple. If Boeing, a week from today, Thursday a week, if I'm talking and I'm saying, okay, we're looking, Boeing, you want to look at Boeing? Boeing is trading at 370 or higher. That is absolutely spectacular action. It really is, because it's saying, hey, boy, it's survived the potential for a pullback, the market pullback. It's ignoring it. It's rallying It's doing well. So here we are. And all I'm saying is that if it starts to get to 3, it has to go 11 points lower for me to say, oh, okay, very good chance now that it's going to test the 9-period moving average of 344 to 345. I think that's just the way I'd look at it. So the answer is, I think that it's getting toppy. It's been a spectacular stock. It gave an opportunity when it made that peak F weekly and peak D daily at 352.23 to pull back deeper. It just didn't take it. Earnings came out, blew away everything. It is a spectacular stock. And you've got, look at this, DEDOW. So this is Germany. Very sharp today, down 7 at 432. Made a high in the daily at peak E at 453.30. January the 23rd. I don't know what to call this. It is a B. I'm calling it a B for now in the weekly, and an F. I'm calling it an F for now in the monthly. I don't want to make any changes. Monthly is still acting very well. Technicals are deteriorating a little bit. Weekly is still holding pretty well, but the technicals are really deteriorating, and the daily is in a sell mode. So that's that. The Dow should have been pulling back. GB, Great Britain. I think it's GB. Let me just see. Yep, GB. This is the United Kingdom. This is the Dow Jones UK Stock Index. These are the charts. They're exactly the same as the indexes, except it's based on the Dow Jones. So trough A, trough B, leg C to the downside. Sharp move down in the British market, the United Kingdom Stock Index. Here again, I've got an incomplete to the upside that says, yeah, there should be a pullback, but at some point, fairly soon, there should be a big rally as well. So that's the way I'm looking at it. So going to international markets, they're starting to pull back sharply. The Dow is in its own world right now, the Dow and the S&P. That's very important. So let's go to Roy in Fort Worth. Hi, Roy. How are you?
Good, Basil. How are you doing today?
Good. So you wanted to look at?
I want to get your opinion about Bitcoin, where it might bottom out, and of course that's related with GBTC. And Larry and John Jameson, they're looking at 8,200 to 8,500. I just thought I'd get your professional opinion.
So I have a quick question. It split some all my letters. My notation was a peak F, I believe, in the weekly, and was a peak F in the monthly. And I can't remember what the notation was. I think, let me do this, A, B, C. It was a D in the daily. Then they split. So it's trading right now. This is GBTC. This is, in fact, Bitcoin Investment Trust. This is kind of like the ET. Do they call it? It's just a trust. So it's at 1287 down 272. Huge, 17% decline. So what I've been talking about for a little while now, if I can just get it, give me 1 second, is that there's the arch formation, and that my thinking was that Bitcoin, as I'm looking at it, should break 10,000 and it should slide 8,800 is kind of the level I was looking at, and I had sell signals on the GBTC. So I'm going to do this 1 second. Here we go, bookmark, there it comes. So I do not trade this, but I do have the chart. Move it over right here. Okay, folks, this is Bitcoin. And remember, even yesterday, did I have a chance to do that? I know I put it up here during one of the breaks. I kept showing this arch formation. The lowercase h that goes to a lowercase m. So here's the pattern. It goes round like this, makes it a low, makes another one, and now let's see where it's trading at this particular point. It's trading at 9,131. I might be a little bit behind, but it made a low today of 9,031. We are real close to that area. So one of the things I spoke about it actually soon after the long weekend, the January long weekend. I said, I came across someone, a neighbor who said he had missed the high-tech rallies over the decades, and he missed different things. He's not going to miss the Bitcoin one. He is in. And I remember saying to him, gee, I got some signals that I might want to be a little careful. Well, I'm saying that Bitcoin, and everyone I heard, I spoke to Tommy, I think it was the other, or someone, and I said that as far as I can see, there are so many people that I'm hearing on CNBC or on Bloomberg talking about 30,000 in Bitcoin. I think we go down a lot more before that happens. So I'm going to recommend Roy. It's at 1280 right now, 1278. The 11.43 is the 200-period exponential moving average. I think you're getting real close to a bounce. Is that kind of what you were looking for? Are you looking for a trade?
Yeah, I'm looking at a point to get back in and everything. So I was looking at
we've got, hold on. Roy, we've got a break coming up. Let me do a little work during the break, and then I'll give you my assessment, and let's see if we can go from there, okay?
All right, sounds good.
Okay, we'll be back, folks. Basil Chapman, Tiger Technicians Hour. Dow's up 132.
Achievers rise above the rest, and when they see an opportunity, they take action, massive action. Achievers capitalize on every resource in order to experience success at its absolute max. And on Wednesday, January 31st, 5 to 6 p.m., I'll share with subscribers of Mastering Probability how to achieve even more success with the extraordinary tools that I use to call the markets. These tools predicted the Ebola 2015 stock market bottom, the December 2017 gold bottom, why subscribers added to their mining positions this month as well. Learn the pattern that projects the Dow's next upside target of 30,740. Folks, great moments were born from great opportunity. So don't miss this opportunity to take advantage of my 30-day money-back guarantee for Mastering Probability. All the details are on the homepage of TFNN.com. Sign up today and reserve your spot for the ultimate subscriber event.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Hi, folks. So we are back, and we've got on the line, we've got Roy in Fort Worth. So, Roy, I've just done a little bit of work on I've just renotated. What I'm going to say to you is, if you can think of this as the starting position, just a starter position, 12.95, if you can get it, the 200-period moving average is at 11.43. I'm not sure this is the low, but it might be a tradable bounce. So if you can get it close to 11.43, let's say 12.35, you could even put a stop in at 11.30 if it even works on stops. But this is the area where I'm expecting a bounce. The best you can expect, it would be a bounce from $12 to maybe 15.5, 17 is the 9-period moving average. But it would only be a trade. I would need more time before I get any signal that says, aha, now you've got a much better move. So just a real quick trade. That's the area, maybe another point down, 80 cents to a point down, and you'd have a very nice position, at least risk reward. Hope that helps you.
All right. That's great, Basil. Appreciate it. You have a good one.
You too. Thank you very much. Let's go to Ben in Tallahassee. Ben, how are you? Real quick.
Yeah, real quick. So here's my thought. We got the Dow up. We got Facebook up. We got the Qs flat. We got the Qs 120-minute looking poor. We got the Qs daily under 80%. And I'm looking like, wow, this looks like a perfect time to short the Qs. And it's going, and it's extremely late volumes. I'm mixing all that together, and I'm thinking, yeah.
So you want to do this before the earnings this afternoon?
I think Apple's going to tank, but that's my personal opinion.
Yeah, I think Apple could tank, but we're also looking at Amazon, Amazon and Google, so they could ameliorate any. You know what I'm going to suggest to you?
Well, what about just forget about the companies? What are your thoughts on just the charts?
The chart to me says that there's a really good chance that we've begun a consolidation. It'll be more than a consolidation if at any point in the next week and a half you see the Qs trading under 167, closing on a daily basis under 167. That'll confirm for me that the IWM is leading the way down. The Qs could follow, and that SMHs are not doing as well as they should. That's the semiconductors. I'm in your camp, but I'm just saying risk-reward. You must deal with the risk-reward. I'm in your camp. Thank you, everyone. Folks, thank you. You've got Steve Rose coming in. Hey, Steve, fabulous workshop last night. Really good work. Folks, check.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.